The official story is completely wrong. Most people think that Bitcoin is going up because Michael Saylor is buying it, because the ETFs are buying it. That's why we see the all-time high in Bitcoin. But actually, Bitcoin is not driving the current rally. Yes, the price is at an all-time high, but have a look at this. This is Bitcoin dominance long term, and it crashed recently with that rally. So Bitcoin as a fraction of all of crypto actually went down. And that's quite a move, right? We haven't seen such a drop for a long time. So what is really going on? If it's not Michael Saylor with MicroStrategy that's pushing up the prices, if it's not the ETF, the Bitcoin ETF that's pushing up the prices, what's going on? Why is the Bitcoin dominance falling when all of crypto prices are still rising? Is the answer in the altcoins? Potentially, partially. What we see over here is the others dominance. So how much of all of crypto percentage-wise is in the altcoins that are not in the top 10? And yes, this did go up with that price rally. Not by much, but still it tended to appreciate. So parts of the market dominance of Bitcoin was taken away by the smaller altcoins. But really, this is the actual story. Ethereum is finally catching up again. The Ethereum dominance is on a massive run since the middle of April of this year. We bounced off very similar levels to what we saw in September of 2019. So when Ethereum was roughly 7% of all of crypto, that's when also we discussed here on this channel that it's a good time to get into Ethereum. Feel free to just check out those prior videos on this channel. Check out the videos of Ethereum around that time for other YouTube channels and also for this channel and make the comparison yourself. This chart implies that Ethereum still has some way to go. We are currently at a dominance of roughly 11.5%, seeing another 22% increase from here, potentially even 82%. It wouldn't be out of the ordinary, right? It's simply what happened in the past as well. So the dominance of the smaller altcoins went up, the dominance of Ethereum went up. So what's really driving the rally? The answer still is Ethereum, because this is the Ethereum market cap relative to the others market cap. So how is Ethereum doing relative to the smaller altcoins? And it's currently on a massive run starting since the middle of April of this year. Now what we see here at the bottom, this is the Bitcoin dominance. When this crashes, right, when this goes from 72% all the way down to 39%, that's when the altcoins are doing great. And this is also when the Ethereum dominance tends to go down. So this is almost becoming popular knowledge already. There is some kind of rotation happening towards a crypto cycle. First, Bitcoin tends to appreciate. So people are very scared of crypto after a bear market. They simply just buy into Bitcoin. First, Bitcoin recovers. Then once Bitcoin has risen already, people tend to take more risk. They tend to move from the Bitcoin gains into Ethereum that might have more upside. This is probably where we are right now. And then once Ethereum has rallied, the altcoins come next. So over time, people get more and more risk on until the market is that much risk on that the risk flips potentially into a crypto crash. When everybody expects prices to double and triple every few months, then those expectations have to get broken, have to get disappointed at some point. But we are far away from that. Right now, Ethereum is outperforming the altcoins. A rotation from Bitcoin to Ethereum is taking place. The Ethereum dominance is going down. And once Ethereum's market cap is roughly double the market cap of all of those smaller altcoins, then maybe we will see a real altcoin rally again. Now, there is some truth to the official story, right? The official story that Wall Street is buying up crypto and pushing up the prices. It is true to the degree that small retail is currently not supporting the prices. There's actually very little attention of retail. There are very few search queries around crypto. There's very few views in YouTube around crypto. So really, it's the big pockets that are buying crypto. But the official story is incomplete because now Wall Street tends to buy more Ethereum relative to its market cap than Bitcoin. In the last 14 days, we saw a supply absorption of Ethereum through the ETF of almost 10%. So if the last 2 weeks were representative of what's going to happen in the future, 10% of the entire supply gets bought up every single year through Wall Street. That's for Ethereum. For Bitcoin, that's also a positive number, but it's only at 6.4% because the market cap is larger. It takes way more capital to move Bitcoin now. But still, the overall trend is clear. Wall Street tends to buy most of the days. There's only very few select days where where Wall Street actually distributes and is a net seller. And yes, Bitcoin has the big advantage that there are treasury companies, namely Michael Saylor. He's buying the most. The issue is that Michael Saylor over time is levering himself up more and more as well. And he has most buying power when the Bitcoin price is the highest, right? That's when he has a lot of collateral that he can borrow against. So unfortunately, Michael Saylor has to buy the tops and he can't buy the bottoms that much. The bottoms are bought via the ETFs. Still, in the last 1.5 years, we saw roughly 6% of Bitcoin supply getting purchased through the ETFs and through the Bitcoin treasury companies. And what's so encouraging about this trend is that the entire chart, the entire balance chart tends to be almost monotonically increasing. There are only a few short periods in time where the entities net are sellers. In general, they accumulate, thus support the price long term. The Ethereum ETF had a bit of a bumpy start because at the beginning, the Grayscale Bitcoin Trust, or the conversion thereof, tended to be a net seller. That has stopped since April of this year. And that's then also when the balance of ETH held through the ETFs tended to go up. And I do believe this is a long-term trend. We will see new all-time highs in the holdings of Ethereum through Wall Street. At the same time, we do see more and more Ethereum getting staked over time, right? Staking is a mechanism where the liquid supply gets artificially lowered. And because of that lowered supply, the price should go up if demand continues to rise. Ethereum might not have the most efficient technology, neither does Bitcoin, but the adoption, the network, that's what it's all about. It's about the distribution, how decentralized is a cryptocurrency. Because the decentralization allows for adoption of assets that aren't 100% speculative in nature. Half of the stablecoin market cap is on Ethereum. The stablecoin issuers feel much better issuing their stablecoins on Ethereum than on another chain that's less established. I'd go so far to say that Ethereum probably has a larger market share in the stablecoin market because I'm not sure how much of the Tron stablecoins are really legitimate. We looked at similar data for the Bitcoin tokens on the Tron blockchain, and Justin Sun actually never showed the matching balances on the Bitcoin blockchain that back the tokens on the Tron chain. And I wouldn't be surprised if something similar is going on for the stablecoins. Stablecoins just getting invented out of thin air. So Ethereum probably is the big anchor. It's where proper real-world asset adoption happens. And that, of course, helps the Ethereum price long-term as well. This is the stable coin market cap over time. It's currently growing at roughly 40 to 50% per annum. A lot of people move from the fiat system into the crypto system. They move their hard-earned fiat maybe to the centralized exchanges. The centralized exchange then sends this over to a stablecoin custodian like Tether or Circle. They then hold the funds in an account, maybe make some return on it with bonds, etc., and then also issue the tokens. And the token issuance and the token redemption we can see in the chart here. And so the chart clearly shows how the crypto market is expanding or contracting. This here was the Terra Luna collapse, by the way. And since October of this year, we are in expansion mode again, and Ethereum is benefiting massively from that expansion as well. Now, I'm trying to approach this channel here slightly differently to other crypto YouTubers. Most crypto YouTubers, they take money from other crypto projects, or maybe they buy into a small crypto project. They have some vested interest and then afterwards promote it on the channel, and then potentially with all of that additional interest, which pushes up the price, they then dump on the following. I never do this. I never promote any individual cryptocurrency that I previously bought. I also never take any money from any crypto project. I try to be as neutral as possible. I try to have no conflict of interest here. Most other channels also don't show their trading history, as in how successful are they. And they're also not willing to share the trades in real time, maybe allow for copy trading. But I'm willing to do this. This is my personal return, so that's the black line, relative to if I had just dollar cost averaged into Bitcoin. That's the light gray line. This is a monthly chart, so this is roughly 4 years of data, a bit less than that. And this outperformance here comes from relative valuation bets, right? We talked about this several times on the channel. Most altcoins tend to do worse than Bitcoin most of the time. And we can make money from that, right? From all of that token inflation. When the insiders dump on the retail investor, when the KOLs dump on the retail investor, when the early venture capitalists, when they get their token allocation and then dump on the retail investor, then there's actually a chance to make money from that by betting on the altcoins to do worse compared to Bitcoin, Ethereum, and Solana. because Bitcoin, Ethereum and Solana doesn't have that much token inflation. All those smaller crappy altcoins do, and so long term they tend to just do worse. And so I made a lot of that outperformance with borrowing and lending platforms. So I borrowed a bad altcoin and then swapped it into Bitcoin, Ethereum and Solana. That's how I made this delta. I then moved over the strategy to perpetual futures. I did this for 2.5 months. And that worked out even better. I did this with some experimental money, 40k, and it returned almost 50% over those 2.5 months. Of course, there's some volatility in this, but still 50%. And so as I did this and as I shared my trades in real time with the premium members, I got more and more requests. Can't I just open a capital pool? I deposit to that pool and you do the trading for me. And I finally just started that. So this is now 6 days ago. We started the copy trading vault. It's already up 3.5%, but of course we don't know how this develops long term. We are now moving more capital, but I'm offering this to the annual subscribers of premium. So there's a dedicated tutorial how to deposit to the Bitcoin strategy copy trading vault. That's on the platform called Hyperliquid. It's an 18-minute video. It explains everything step by step. And then you don't have to follow the individual trades that I share, but instead you just get the exact same performance that I get. Both the gains, but also potentially the hard times. Nobody knows how this is going long term. It worked very well with borrowing and lending platforms. It worked very well on my first test initially. And I'm working hard that it will continue to work as I'm trading with your capital. But yeah, you can still execute the trades yourself. I'm still sharing this all in real time in premium. You can also discuss potential opportunities with the community. Right here are some example trades. But the active approach is for people that don't have as much capital, but that do have some time. So that's for the monthly membership. That's currently at 125 per month. If you don't have the time, then you can simply subscribe for the yearly membership. Then I will send you all the information how to enter the copy trading. And that's for people that have more capital, but of course less time. The yearly membership, by the way, also saves some money, $250 per year. So you're only paying for 10 out of 12 months. If it's your first time here, feel free to subscribe. I publish these regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube or see you in premium. Cheers.